mention that the call is being recorded. It usually is announced, but this time I didn't hear anything.
Yeah, it's recording now. It's the new Jitsi. It doesn't announce anymore, and it's recording.
Okay, good. So hello everyone, and welcome to DXDAO's weekly strategy call. Today is Friday, September 23rd, and we got Jarek presenting the DX legal assessment. And then once we have some time left till the end of the call, we will be discussing our upcoming events for Bogota, Colombia. Jarek, you got the stage now.
Okay, thank you guys. I'm already sharing the presentation with you. So just can someone just confirm that? Okay. Okay, so let's start with the presentation. Thank you for joining. This presentation based on the paper that I prepared and which will be shared, I think, with all of you and maybe on the DAOtalk forum as well. So today I'm going to talk about the AML KYC measures in relation to the DXDAO. I divided the presentation into 4 parts. I will start with the introduction about the topic and about me. Then I will switch to risk factors, which I divided into 3 parts: the money laundering, terrorist financing, in relation to global, US, and EU areas, sanctions evasion and blacklisting. Then I will talk about possible AML KYC measures as a response to risks. And then I will briefly describe some approaches taken by other DAOs. So let's start with the introduction. About me, I'm an EU-based attorney at law, admitted to bar in Poland. I used to work in the financial supervision in Poland. Then I was a compliance officer in bank, investment fund management company, and in brokerage house. I was also an anti-money laundering reporting officer in payment institutions, so a lot of experience from the traditional finance, which I think you might notice during the presentation, because the approach and generally the of AML, it has its grounds in traditional finance, and I'm currently providing services groups. So the aim of the study of the paper, the aim of the study of the paper was to provide the initial overview of what the DXDAO could be concerned with regards to AML KYC laws, and some suggestions on proactive measures to take. Also a review of how different DAOs have approached this question. So the topic is really broad, and I had to try to describe it in a manner that would not be that long, but would provide like the most important things that has to be said. And of course, a disclaimer, which is very popular in the US, that none of this is legal advice. It's funny because in Europe, I don't really use this disclaimer in such obvious situations as a presentation here. But anyways, of course, do not base any of your decisions on what I'm about to say, because it's not a legal advice. In case of risk factors, I decided to approach, and one thing also, because I am seeing only my presentation, so I don't see any direct messages. So in case you have any questions during the presentation, just please say it loudly, because I don't read the chat section right now. So let's start with risk factors. I decided to analyze the applicability of AML and KYC laws and standards on the basis of the regulatory risk-based approach. Currently, as you know, there are no laws that can be identified that require the application of AML KYC measures to DAOs in general. Such laws exist, among other, in relation to banks, to investment firms, investment funds, etc. So, in general, in relation to traditional finance. And this regulatory risk-based approach. It allows to apply mitigating measures directly in response to the risk identified. This approach, I think, is applicable to DAO because we do not have a specific set of rules that could be applicable. We do not have any legal entity set up in a particular jurisdiction. So depending on the jurisdiction, depending on the approach, we might have certain different risks that we should take into consideration. That's why we just have to try to identify the risks, the most important risks, and then maybe come up with some solutions to address those risks. And those risk factors I divided into, as I said, money laundering, sanctions evasions, and blacklisting. And I will start with money laundering in terrorist financing. From the global point of view, the most important standards and reforms come from Financial Action Task Force. It's a global money laundering and terrorist financing watchdog, which sets up standards for most developed countries to follow. The FATF has already issued several documents relating to virtual assets that have influence on the global regulatory regime in relation to virtual assets. And still, as for now, DAOs are not directly considered as virtual asset service providers by FATF. But in terms of the definition, there are some nuances that might be might result in qualification of certain DAOs or certain DeFi as virtual asset service providers, because the definition of virtual asset service provider includes safekeeping, administration of virtual assets or instruments enabling control over virtual assets. And FATF explains that safekeeping consists of the service of holding a virtual asset or the private keys to the virtual asset on behalf of another person. And also the term administration could include the concept of managing virtual assets for or on behalf of another person. This is just a part of the definition, but FATF considers the definition of the virtual asset service provider to be broad. And in consequence, according to FATF, any entity that has the ability to exercise control over virtual assets may qualify to be considered as virtual asset service provider. And in simplest terms, FATF describes safekeeping as a service of holding virtual asset or the private key to the virtual asset on behalf of another person. So this is something that we have to take into consideration when thinking about whether DAO might be influenced by such a definition, especially that FATF provides standards that are followed by other countries, but might be changed or might be implemented in a certain way that might differ slightly from what FATF describes. And also, one of the most important, more important areas of regulation in terms of FATF is the recommendation 16. This recommendation relates to wire transfers. And this recommendation also forms basis for other countries to follow, and it requires both financial institutions and virtual asset service providers to collect personal data on participants in transactions exceeding $1,000 or euro. So in consequence, any entity considered as virtual asset service provider might be subject to such obligations following the implementation in local laws. I will also mention this later when talking about the regulatory developments in the European Union. So in case of risks, in case of risks related to global developments, my take and my approach is that the broadening of virtual asset service provider definition is one of those risks, and it might include, for example, natural persons holding private keys to DAO's treasury. So that's one of the ways such a definition might be changed or further changed. And also national interpretations of travel rule is also one of the risks, as does this kind of interpretation might require the provision of personal data from the originators of crypto transfers coming from the DXDAO treasury. Also, introduction of recommendations requiring the provision of information on more parties involved in crypto transfers, as well as on the source of funds in such transfers. And also introduction of new approach to DeFi, including requirements for entities interacting with protocols and for protocols themselves. So unfortunately, these are broad subjects, and these are just divagations. But these are the risks that I think any DAO should take into consideration and should observe in terms of local developments and in terms of what particular jurisdictions adopt on the basis of certain rules and recommendations of FATF. And then now let's switch to the US and risk factors in the form of money laundering and terrorist financing in terms of US. So there are the regulatory. Sorry, I'm just. So as you might know, in terms of general supervision, there are certain supervisory authorities in the US. There's not one authority that would be responsible for the supervision over the digital assets. So we have Securities and Exchange Commission, we have Commodities and Future Trading Commission, we have Consumer Financial Protection Bureau. But in terms of AML and sanctions, there are two primary regulatory agencies. It's the Financial Crimes Enforcement Network and the Office of Foreign Asset Control. So my take is that the risk factors in case of the US market and US jurisdiction is connected to how the supervisory and general government agency work. Because in March 2022, the executive order on ensuring responsible development of digital assets was signed by President Biden. And it listed a focus on mitigating illicit finance and national security risk by directing, and quote, unprecedented focus on coordinated action across US government agency. And I was really curious how, in which direction this is going to develop, and it is still yet to be seen how exactly this focus would influence actions of all government agency in terms of AML. But I think that the crackdown on Tornado Cash and the most recent example of a penalty by CFTC on B0X, it might also result from this executive order and the approach taken by government agencies. So these are the risks, and unfortunately, these are the risks that do not result from the already existing laws, as you might know, but these risks result from the approach taken by those agencies, by the, not on the laws themselves, but rather on the interpretation by enforcement. This is something that, especially the last example with B0X, this is something that is going to have a lot of focus of the crypto community, because, as I said, it is not based on it's not based on any existing laws that this even the B0X could follow, but it's rather the interpretation, as far as I know, of other laws and how they're applicable to DAO and to protocols. Now let's switch to the EU. Also, and I start with the provision of some background. So the AML regime in Europe is different than that of the US to some extent, because we have in the US there are some state laws regarding digital assets and there are federal laws. In case of European Union, we have local laws, we have directives, EU directives, we have also EU regulations. So EU directives are implemented, and when they are implemented, they are sometimes changed. And the term gold plating is also connected to the implementation of certain EU directives when certain new parts, new regulations are added. But in case of EU regulations, they are directly applicable, on all member states. So in case of the approach of EU authorities, we can see the shift towards regulations, and we see more and more planned laws in the form of regulation in order to align the AML regime in Europe. So currently there are 4 key elements which need to be taken into account, and which might have effect on crypto asset service firms and crypto asset service providers and the crypto community in general. So the proposal for regulation establishing the anti-money laundering authority for the whole EU. So this is something like totally new. The proposal for the AML EU-wide regulation, also the big change, because currently we have each and every country has its own laws on AML, and now there's a plan to align all those laws under the regulation. There's this new 6th directive on AML CFT, because still local laws will be needed, and they have to be directed by the directive. And also the amendment of the transfer of funds regulation, and this transfer of funds is a EU regulation that is also based on the FATF recommendation that I mentioned previously. So under the new regime, all virtual asset service providers will have to monitor its users for suspicious activity. They'll have to report such activity. So again, it's really important what the virtual asset service provider definition will include, because there's already a buildup of obligations towards virtual asset service providers when we are still not sure which entities on which parts, it's better say which parts of the community will be covered by it. And this new regime will require to provide, on request of competent authorities, information on persons involved in crypto asset transactions. Also, what this regime will require would be to adopt policies, procedures, even controls to ensure compliance with sanctions. And additionally, virtual asset service providers will need to obtain and submit information on the transaction's originator and beneficiary when sending or receiving crypto assets. So what are the risks that I see and that I think that have to be taken into consideration? So together with the draft regulation of MiCA, so Markets in Crypto Assets Regulation, which is about to be finalized, the regulatory package in Europe will drastically change how the money laundering regime will be shaped in the coming years in relation to crypto industry. Unfortunately, it is still difficult to predict possible future developments in relation to DeFi, and DAOs, and that's connected with the exact definition of virtual asset service provider. And in particular, it depends on the final shape it depends on which entities will be covered. Certain changes in relation to definition of money laundering are planned in AML6 directive. They might result in consideration of some activities involving the transfer of digital assets, involving the use of certain protocols as aiding, abetting, inciting, or attempting, because currently it depends on the particular country whether certain actions are considered as aiding, abetting, inciting, or attempting. But AML6 directive foresees the general definition of money laundering to include aiding, abetting, inciting, or attempting. So it's one of the possible risks that I see, that particular actions connected to DAO, to Treasury, to protocol, when some laundered funds are involved of any crime is suspected, they might be considered to be aiding, abetting, inciting, or attempting. As with other regulation, we have to wait and see what shape will it take, and as it is as this definition is provided in AML6 directive, it will be implemented by each and every country. So again, the interpretation, the implementation might differ depending on the country, but still such risk should be identified. Okay, so let's now switch to risk to sanctions evasions, and as one of risk factors, and to provide some background. So as you might know, the US and the EU have imposed an unprecedented number of sanctions on Russia since 2014. So not only since this year, but it's been since the first. Since the war started, and the war, to be honest, started in 2014. So in case of the US, there are four major sanction programs, and the EU has since adopted 6 packages of sanctions in response to the invasion, and in response to the recognition of non-government controlled areas of the Donetsk and Luhansk oblasts. And outside the EU and the US, other Western allied countries also impose sanctions on Russia. So we have some programs from UK, Canada, Japan, or Australia as well. So we can clearly see that the sanctions program is robust, and multiple jurisdictions are involved. So what are the risks? So overall, the following risks can be identified in my opinion, in relation to sanctions evasion. First of all, authorities might decide to sanction individual wallet addresses related to the DXDAO, its contributors or products. It also might be established that certain DXDAO holders or contributors are sanctioned persons or entities, or persons coming from sanctioned countries such as Iran or North Korea. It also is possible that it might be established that the DXDAO treasury consists of some assets originating from sanctions entities. The third risk factor that I wanted to discuss is blacklisting. As you might know, there are certain issuers of cryptocurrencies and stable coins such as US dollar, USDC, or Tether have ability to block certain blockchain addresses from accessing particular digital assets. Center Consortium, LLC, which stands behind the USDC, informs in its Center Consortium network blacklisting policy, which they have, that it has the ability to block individual Ethereum blockchain addresses from sending and receiving stable coins, USDC, and it calls it blacklisting. And according to the policy, when the address is blacklisted, it can no longer receive USDC, and all of the USDC controlled by this address are blocked and cannot be transferred on chain. And Center decides on blacklisting by majority vote of its board of managers. And the following circumstances are described in the policy. So the failure to grant the blacklisting request presents a threat to the security, integrity, reliability of this USDC network. And the other one, which is more important to us, is whether is when the blacklisting is to comply with the law, regulation, or legal order from a duly recognized U.S. authorized authority, U.S. court or competent jurisdiction, or other government authority with jurisdiction over center. So frankly, this means that the circumstances when such blacklisting is possible are very nuanced, and it's really not possible to really decide which exactly which agencies or which institutions exactly have power to request such blacklisting. So the risks. The risk as follows. Decision might be made by stablecoin issuers to blacklist addresses related to the DXDAO, its contributors or products, following sanctions imposed by US or other competent authorities on the DXDAO, its products or addresses that happen to be somehow connected to other sanctioned entities and to the DXDAO at the same time. And blacklist. The problem is that blacklisting would most probably be done without any notice. So there will be no time to properly prepare in advance, including the clarification of the grounds of sanction and possible litigation. And in terms of litigation, the legal ambiguity might result, and most probably will result in practical difficulties to appeal the blacklisting. As we know, the centralized organization does not have most probably will not have grounds to appeal such blacklisting. So what about the responses to risk factors? So as I said, no explicit laws apply to the DXDAO that would require the introduction of such measures. Any such actions might result purely from the intention and subsequent vote on a relevant proposal regarding this. And one of the possible approaches that I see, taking into consideration with the complication of working as a DAO and being a DAO, is to distinguish between voluntary and mandatory KYC measures at the DXDAO. And what I mean by this is that it might be possible, it could be discussed whether to introduce the certain measures and certain mechanics that would make the AML KYC measures welcomed by possible persons that would be subject to such measures. And the introduction of such voluntary AML KYC could be aligned with certain incentives from the DXDAO. And it could also be applicable in case of some smaller risks, some medium or low risk identified in relation to the DXDAO. And on the other hand, in general, the AML KYC measures might include as little as due diligence of the DXDAO treasury, which was already proposed, and this due diligence could be in terms of transaction history and sanctions addresses. And on the other hand, like the most complicated version of this would be the general KYC requirement for the DXDAO stakeholders, which, to be honest, I don't think would be possible taking into consideration what DAO is and why people join DAO. But these are like two sides of the spectrum. And in case of voluntary AML measures, I will discuss this later. Let me just check. Yeah. Okay. So the AML and measures could be discussed in relation to particular services, and they should be discussed rather in relation to particular services than in relation to DAO in general. Because to be honest, right now my opinion is that the introductions of any like AML measures in relation to DAO in general is frankly not possible, feasible. It might be discussed, but it would be such a cumbersome thing to do that I don't believe that such a general approach would be possible. And to be honest, it would be I think the first DAO that would try to do something like this, which I'm afraid could end up with the end of the DAO itself. So that's why I think that the one of the possible approaches could be the application of certain measures to certain products. So in case of Omen, the problem is the risk is that the prediction markets might be considered subject to regulatory approval, or they are illegal in certain jurisdictions. So AML KYC measures might be considered, for example, mandatory to apply in order to exclude certain users from such jurisdictions. In case of flows of assets, mandatory KYC measures might be applicable from certain levels of funds locked. So this is also an example of the risk-based approach. In case of MESA, trading interface might be considered as a service used for trading in assets, which might be considered securities in case of US, or financial instruments in the EU. Thus, mandatory AML KYC measures might be applied when certain trading thresholds are reached in order to continue using the service. In case of Carrot, a platform that allows projects to create community-driven programmable incentives, seem to pose little ML risks. Therefore, for example, voluntary AML KYC measures might be considered in relation to certain higher risk initiatives, relating, for example, to finances, to sports events, so resembling betting. In case of Swapper, automatic market maker might be subject to regulatory scrutiny as an unregistered swap execution facility, as it is called in the US, or investment firm operating OTS, or organized trading facility, in the EU. So AML KYC measures might be considered mandatory, for example, in order to, and at least to some extent, address typical requirements applicable to such regulated entities. And so, what about approaches taken by other DAOs? To be honest, I was hoping to find some DAO that would be similar to the DXDAO, but we know that it's rather not possible, and I couldn't find any. And I was also hoping to find a DAO that has some already developed AML measures and is for just maybe in part similar to what the DXDAO is. But to be honest, I couldn't find any. But nevertheless, in case of those that I checked, Uniswap, so no KYC is required to open the account and start using Uniswap. No KYC is required to obtain and hold Uniswap token. And in case of legal wrapper and some institution, because this might be also important in terms of DAO, that's why I also checked whether any institution was set up with the DAO or for the DAO or by the DAO. So in case of Uniswap, in August this year a proposal was submitted and voted in favor to create Uniswap Foundation, and it was tasked with mission to support the decentralized growth and sustainability of the protocol and supporting ecosystem and community. So there is then an entity that was set up last month. In case of DXDAO, no KYC is required to become member, And in terms of institution and entity, the LexDAO is an unincorporated nonprofit association under the laws of Wyoming. SGDAO, which I am a member of, it's an investment DAO, so that's why they introduced the full KYC, and this full KYC is required to become a member of DAO. They use Persona for KYC, so it's a verification on the basis of selfie and ID, and it has two legal entities. The first one is LLC that houses the investing portion of the DAO, and it is structured as a typical venture capital fund. And the second entity is a Colorado-based limited cooperative association. So they have both association and LLC. In case of Bankless DAO, which I'm also a member of, no KYC is required to become a member of the DAO, and no legal entity serves as a legal wrapper for the DAO. Merit Circle DAO, same, no KYC required. There is a company set up, Merit Circle Ltd, and then it hosts the DAO development team. Stake DAO, and that was one interesting thing, that because the Stake DAO privacy policy relates to collecting personal information, and that consists of full legal name, address, email, phone number, date of birth, etc. But no KYC requirements could be found to be applicable in relation to new users. So I don't know why, but it seems that although the policy relates to obtaining such data, this kind of requirements are not introduced. Another interesting thing is that this DAO privacy policy describes the Stake DAO as a company, but I couldn't find any other references to any legal wrapper related to Stake DAO. So it might be possible that such entity does not exist, or just I couldn't find it. Shapeshift DAO, it's also financial DAO. KYC is not required to use the service, and the Fox Foundations was formed with the charter of overseeing the decentralization of the trading platform and its assets. Mantra DAO was another DAO that I checked, and here also no KYC is required to use its services. But again, similarly to other DAOs, the Mantra Foundation was established alongside the DAO. So that was the last DAO that I checked. So as you can see, it seems that there are no similar DAOs that would have already covered the ML KYC topic. And there are no similar DAOs that we could check and we could use as a point of reference. So just as in other areas of activity, I guess any approach to the ML KYC and this topic, this would be something that we would have to do first ourselves. I would like to end with some optimism. So so I guess although like the regulatory situation right now might look like difficult, on the other hand, my approach is that the more regulation is there, and the more litigation like show ups, the more we know. Because it's always like it's always better to know the laws, know the point of view of the regulators, than to get to know them from the litigation to ourselves. So I just hope that the upcoming years will just provide more rules that would be easily that we could use as a point of reference, that would allow us to even just to find ourselves in the system. Because right now, as I think as you could like read and see from my presentation. There are still many unknowns and just risks that we have to live with, and that we might try to address. So, and I think that would be all. Thanks. It's 45 minutes. Sorry, guys.
No worries. Thank you very much, Eric. Ending on a cliffhanger. A lot of unknowns. Actually, known unknowns. We all know that it's unknown what our fate is when it's in the hands of someone else.
Yeah.
And we're just trying to figure out what the best path forward would be so that it's mutually beneficial. We are cooperative. We wish to cooperate with regulators, but when there's uncertainty, it seems like they don't want to cooperate with us. Has anyone got any questions?
Yeah, Derek, that was really great. Kind of a question is more of, over the last couple of years, there have been, I recall, a lot of different projects that were almost trying to offer KYC or AML services. And, I think you could do this pretty easily where you have someone who does KYC AML and then they give a token, maybe it's a non-transferable token, to a certain address. And then that address is KYC'd or whitelisted or whatever. And then that service could be used by other decentralized exchanges, and all you would have to do, or any other service, DeFi protocol, all you would have to do is check to see whether they have this token or this non-transferable thing. And so I guess my question is why don't you think any of the KYC AML stuff has moved on chain? I guess the AML stuff maybe has, with you don't really need it with USDC and all the stable coins because you can track it there. But I guess I'm a little surprised that there hasn't been any KYC projects that exist on chain in DeFi there. So any kind of thoughts on why that hasn't risen? Or
I think first of all, when I'm referring to AML KYC, I'm referring to the already existing solutions, and it's another topic of all the solutions that are being developed and all the solutions that might be developed that would be different than what we know right now. That we have to show to each institution our ID, I have to show my face, etc. And so I hope that in the years to come, and maybe in the months to come, more and more solutions that would be more tolerable to typical users would show up. And then maybe thanks to such solutions that would allow, for example, me to docs and to do the KYC myself once. It would allow me to use the many services in the crypto sphere without providing all my details and doing the KYC all over again. So that's one thing. And the other thing is that because I come from the traditional finance, I see that no one likes KYC, no one likes AML, and the only time when funds are really provided to implement this kind of solutions is when it results from the law. There are risks of getting some sanctions, getting penalties. So this is when the institutions really decide to implement everything. And when this is the case, when the companies that deal with KYC, they see that the money is there, so that's when they start to develop this kind of services. So I think this bear market, it might result with some new developments in the KYC sphere, because regulators are just going to force more and more the crypto industry, just to really use the KYC, and one day maybe it will just be required by law. So but unfortunately, this is what I think will be the case. But of course, I would hope, that we could come up with a voluntary KYC. I believe there are many people that they just use the services and they don't mind doing the KYC because so that's not the problem for them. I'm doxed. I do the KYC everywhere, but But I think that the real shift would be when this kind of solutions would be really required by law. That's my take on this subject.
Yeah, it's kind of I don't know if my microphone is a little better now, but yeah, I think one of the things for the KYC angle, and really like in general, as you see the melding of the worlds of crypto and real world, that the most effective way that the existing world can regulate crypto or have an influence on crypto is to build something that is native in crypto that represents something off-chain but still operates in the crypto world. So I think the best example of this is USDC, right? USDC is about $60 billion in market cap. It's like I guess Tether is a little bit more liquid than it, but it is very much integrated in the DeFi Ethereum ecosystem, even though it's like basically going to be regulated and controlled very, very hard. And so I guess like when I'm thinking about the KYC angle, it's kind of like wondering what KYC might try to be implemented that will actually be operating in the crypto, in the blockchain world. Because in the end, I think that's actually the only way you end up regulating it, because they are, I mean, unless you can shut down like the blockchains themselves, they are sovereign entities. And I think there are things from the outside world that are very much needed in the blockchain world and give it more legitimacy. But I think there will be instances of like, what is the USDC of KYC AML? That's something that's kind of like native to the blockchain world that kind of achieves these same aims. And I think that'll take time to develop because it's a little bit different, but that's what I think would be the likely path forward.
Yeah, I agree. So any more questions, comments in relation to this topic? I will share the report. I think in Keybase we already have a legal channel, so we might continue the discussion there. And thank you all for listening. And
thanks, Jared. Just while we have you here,
thank you very much.
There's obviously a lot of chatter about the BZX, or I can't remember what are they called, Oki DAO case, where the CFTC kind of went after, it seems, not just went after the whole DAO. So I don't know if you have any thoughts on that, or quick commentary.
To be honest, because it was published in the morning, my time, so I didn't really read the order and the papers, so unfortunately I cannot address this. Besides that, as soon as I saw it, I just thought about this executive order, and I just imagined the meetings between those agencies, and frankly, I think they really know that it's far-fetched. They're trying to get a really small DAO. As far as I know, as far as I read, the treasury is like $40,000 or something like this, and they are just going, I think, for the relatively easy case, maybe to set up the precedent. And unfortunately, this is what I read is a regulation by enforcement. And I'm also wondering how any authorities in the EU could react to something like this, because we can see that this regulatory and enforcement storm is just based in the US. Of course, it results from the fact that the crypto industry is located there. But I wonder, because there are many similar DAOs, similar protocols which are not based in the US, and I wonder, how this kind of approach, this US approach, would influence our other projects that are not based in the US. So but as I said, I couldn't. I didn't have any time today just to read through those papers. So I don't know any specifics, unfortunately, yet.
Yeah, it's interesting you say that how the European regulators respond, and I think you made a comment in Keybase about whether this was part of the coordination across U.S. agencies in terms of digital assets that the Biden administration, I think, hinted at back in March. And I think like what we're thinking now is much more of like, what are the regulatory incentives here, or the regulators' incentives, right? We're talking about the CFTC and SEC, or in a European regulator, like what are the reasons that they are going to act or to push things forward? And I actually think if you look at the US, I actually don't think it's as much about trying to coordinate as much as it now is about staking out territory. I think people kind of realize that this is a huge new industry, and if you're a regulator, you want to be able to regulate as much as possible. So I think this is what Gensler has been doing, right? He's like kind of basically saying everything is a security, everything falls under the SEC. And so I don't know, the CFTC has been a little bit more, I thought, laid back in terms of like kind of how this is developed, but it seems like I could see this as just another way of them trying to cement their authority over digital assets, just because, you know, people want to control more. Institutions want more power.
That is interesting because, you know, my opinion is that in the Europe, I can say say something in relation to Poland, and but also in case of other European countries, I see that that the approach of this agents of the regulatory authorities, that just to mark when their authority ends. So I don't see right now this kind of like approach of the US, that they're trying to grab some actors, some entities that are outside of the scope of their authority, but rather they're trying to show to limit their area of concern to certain entities, and then leave the rest outside of it. Which doesn't change the fact that in case of consumer protection, there are authorities dealing with the consumer protection in Europe, which are going after some influencers which advertise certain crypto schemes, Ponzi schemes, etc. So in case of the consumer protection, I see certain actions of authorities, but on the not in a way like similar to the US. Maybe there are some cases like already being discussed in the EU, but you know, we have like our legal system is different. Your basis rather on your, I say, because Chris is from the US, based on the precedent. So my take is that maybe this case should be is meant to end up in the court, and then is meant to be some sort of precedent in relation to DAO. Maybe that's a good thing that it will end up in court, and we'll see, you know, where this case will end up eventually after it is. But on the other hand, you know, this as far as I read, these contributors, these guys that they plea bargain, they agreed to be fined. So I'm not sure if there's going to be any litigation at all, because they agreed to pay this penalty. So I don't know. I have to read more about it, but I right now I think that there might be no litigation at all if they like agreed that they will pay the penalty. So they admitted to the actions that were described by the CFTC. So to be honest, I don't know when it will end up. But I think there are some other cases already being developed, and we'll see them in the upcoming months.
So is it safe to say that the focus of regulators would be organizations that have had like class action or some kind of litigation between the parties involved, because you know, people felt like the project was a Ponzi, or there has been a hack that people want more clarity on, like who's been involved, why it happened? Like, is it safe to consider that a project that is safe from such happenings is safe, or there's no guarantee?
I hope, but of course there's no guarantee, but I hope that they also have to have some sort of approach that allows them to focus on cases that are easier. So if we have a case when there is a when there are potential problems with the code itself, when there is some negligence of some core contributors, when we have a project when we can really know who the contributors were, when we have some companies that did develop the code and then also earn something on such a project, then these sort of cases seem like better just to handle from the supervisory perspective and go after. And in case of projects such as DXDAO with no such problems, my take is that the risks are smaller, and the incentive of the supervisory of the regulatory authority might be also like smaller than in case of some Ponzi schemes. So that's my opinion.
Well, thank you very much, Jarek, and thanks for everyone attending. It is nice to see people interested in learning more. I think we could call it at the top of the hour. I wish everyone a lovely Friday. Cheers, everyone.
Okay, thank you very much, guys.
Thanks, Eric.
Thanks, Eric. Thanks, Nathan.
Cheers.
Thanks.